As a small business attorney, the question I get asked the most is, what type of entity should I choose for my business? LLCs, S Corps, and C Corps are the most common entity types. But before we get to the question of which type of entity, it is important to know why you should bother setting up an entity at all. From a legal standpoint, setting up an entity for your business provides great liability protection. It creates a shield between your personal assets and your business assets. This means that if someone was to get a judgment of some sort against your business, the creditor or claimant would have a harder time collecting against your personal assets, like your home, your car, your personal bank accounts, or your future wages. The creditors could only easily reach your business assets, like your business bank account. All of the entity types we'll discuss, LLCs, C Corps, and S Corps, provide this liability protection. As you weigh which one is right for your business, keep in mind that procrastination is the worst option. Any entity at all is better than no entity. We'll begin by describing C corporations. C corps are the traditional entity type, but they have a big problem that makes them less than ideal for most small business owners: double taxation. Double taxation means that C corps are taxed on the corporate level and that the shareholders, who are the owners of the corporation, have to also pay taxes on the money they make from the C corp. Additionally, C Corps have many formal requirements to maintain their C Corp status. For example, they need to hold an annual meeting each year and keep organized meeting minutes. They also have to name officers and appoint a board of directors. One major advantage, though, is that venture capital firms strongly prefer that any business they invest in be structured as a C Corp. Some even require it. If your business will not survive without venture funding, you should definitely be considering a C Corp. In my experience, however, this applies to only a small number of businesses. Next, LLCs. LLCs are my personal favorite entity type because LLCs are simple. First, they avoid the double taxation problem because LLC isn't actually an IRS tax classification. They are taxed as either sole proprietorship or a partnership, depending on how many members are in the LLC. Members are simply the owners of the LLC. Second, LLCs have fewer legal formalities than C Corps do. You don't have to hold annual meetings, keep minutes, or appoint a board of directors. You certainly can if you want to, though. Additionally, LLCs have a lot of flexibility when distributing profits or losses. In C Corps, profit and loss distribution must be in proportion to the number of shares owned by each shareholder. LLCs do not have this restriction. Overall, LLCs are the easy button of entity type. Finally, S corporations. C Corps and LLCs can both elect to be taxed as an S Corp. An S corporation is an IRS tax classification rather than a legal entity type you file with the Secretary of State. To tell the IRS you want to be taxed as an S Corp, you have to send them a form, Form 2553. Businesses often choose to be taxed as S corporations to avoid double taxation, and there may be other tax benefits as well. We aren't tax attorneys, so we can't give advice on whether S Corp status would be best for you or your business. You should discuss your options with your accountant. There are formal requirements to qualify as an S Corp, making them less flexible than LLCs and in some ways less flexible than C corporations. For example, S corporations cannot have non-resident aliens, partnerships, or corporations as owners. There can only be up to 100 owners, only one class of stock or membership interest, and they can't be an ineligible corporation. In addition, S Corp owners must pay themselves as employees, which means that even if you're the only member, you have to set up payroll. Some business owners find the tax benefits to be worth these restrictions, though. It is possible to form your business as an LLC or C Corp and choose to be taxed as an S Corp down the line. Each year, the IRS has a window when businesses can make this election. Again, I highly recommend talking with an accountant to determine the best tax status for your business. I hope that helped clear up some of the differences between LLCs, C Corps, and S Corps. Thanks for watching. Please check out our website, www.gglawoffices.com, for more information or to set up a complimentary consultation. We'd love to hear about your business and help it get going and keep growing.